7. We are in a special session for central banking important questions. We will be covering major important questions in half an hour. Whatever we can maximum, around 15-20 questions we can cover. Okay, so we will be covering them. So let's start without wasting the time immediately. Okay, yeah, first one. The Committee of Capital Account Convertibility was chaired by the following expert on the central banking. So who was chairing this committee? Everyone, think over it. First, I'll get the answer from your side. Okay, then I'll give you the answer. See, many of the questions are given in your books also. The Committee on Capital Account Convertibility was chaired by the following expert on central banking. Who was it? C. Rangarajan, S.S. Tarapur, Y.V. Reddy and Vimal Jala. So the answer is everyone. Think over it. So it was chaired by anyone? Yes? Think. It was chaired by S.S. Tarapur. Okay? Important question in your exam. It might come over there. Huh? Convertibility was chaired by S.S. Tarapur. Pick up from the following one of the major preconditions of capital account convertibility as laid down by the Committee on Capital Account Convertibility. So, what were the major preconditions? Adequate foreign exchange reserves to achieve minimal annual growth rate, exchange rate stability, and mandated inflation target. What was the answer for this? See, preconditions for capital account convertibility. Firstly, understand what is capital account convertibility. Capital account convertibility. Okay, CAC. What is that? Sir, it was opening up of that market. Okay, the entire market was opened under this for this capital account. Means what? Here the concept of LRS came in, liberalized remittance scheme. Okay, so all that 2,50,000 amount that is allowed. Okay, so that comes all under this convertibility. Remember, there are two accounts. One is current account and second is capital account. Current account means what? Current account means every country will have two types of accounts. As we have the same in our banks also, similar way. So you'll have two accounts. One is current and second is capital. Current, second is capital. Okay. So capital account means what? Where you have a change in assets. Change in assets. This happens. Assets. Okay. This is capital account. And current account means what? Here there is no change in asset. This is for regular working, running of the business. Running of the business. Okay. So that is basically current account. Here the focus was on capital account convertibility, CAC. Okay. So what were the preconditions? Means what for the country levels here. If you consider this as a country, we consider this as Bharat now. Okay. So suppose if you consider the Bharat as a country, then what is the capital account for this? Capital account over here means selling of the government assets, buying of the government assets in some foreign land. Okay. Then selling of the government land also, it can be anything, or getting the loans, means one-time loans from various IMF and other parties. Okay. So the important part over here was preconditions was your mandated inflation targets. Here RBI will always work, or any central bank in the world will always work with the inflation angle. Whatever work they do, they will always focus on the inflation angle. Okay. Let it be foreign exchange reserves, let it be growth rate, let it be exchange rate. But the basic purpose of everything over here is inflation. Even our forex reserves, which are maintained by the RBI, those are also for the purpose of targeting inflation. Okay. Remember these basics. RBI will always work towards inflation control. That's it. Let it be forex, let it be anything else. Okay. During the macroeconomic crisis in 1991, inflation reached a peak of 15%, 17%, 20% and 30%. Now this, where did it reach? 1991 means at that time when Manmohan Singh opened the economy. I won't say specifically Manmohan Singh, it was the Narasimha government and it was the need of the hour at that time. The pros and cons of that can be discussed later, okay, but that's not a point of our discussion today. What is the answer for this? Think over it. First you think over it, everyone. What is the answer you have got? Everyone, what is the answer you have got? Was it 15? Was it 17? It was the highest, one of the highest. It was 17% at that time. Means inflation at 17%. Can you imagine this? Inflation at 17%. What is the present day inflation? Type in the comment section. Everyone, type in the comment section. What is the present day inflation? Today's inflation. Can anyone give me? Type in the comment section. Yeah. In September, it was roughly 5.02%. Means CPI I am talking of, Consumer Price Index. CPI was something around 5 point something, 5.02 roughly. Means roughly you can consider as 5. Okay. So CPI was 5% and WPI was very less. Okay. So we generally consider CPI. Okay. So now coming back. So at that time it was 17%. Today it is 5.5% and then also we saw it's huge. So at that time 17% means what might be the rates over there. The Discount and Finance House of India, DFHD, was established following the recommendations of the following committee. So which committee gave the Discount and Finance House of India? Banking Reforms Committee, Financial Sector Reforms Committee, Committee on Monetary Reforms, Committee on External Sector Reforms. So who gave it? Everyone? Yes? It was? Think over it. Let me see the options in the comment section. Everyone, let me see the options in the comment section. Everyone. Is it A, B, C or D? Banking sector reforms or financial sector or monetary reforms or external sector? You might have studied this by now. These are from your books only. Many of the questions are from your books. Okay. What is the answer for this? It is monetary. Okay. Committee on Monetary Reforms. This committee gave the establishment of DFHD. Okay. Discount and Finance House of India. This was given because of this committee. Okay. Do you know what is the job of this DFHD? What does this DFHD do? Yes? Anyone? Yes? It is basically a money market institution which was incorporated long back in 1988. Okay, what is the job of this? The main job of DFHD means objective of this money in this institution is to facilitate smoothing of short-term liquidity imbalances. Smoothing of short-term liquidity imbalances means Suppose if there is any short-term problem, then the RBI, short-term problem of liquidity, then RBI can bring in LAF, liquidity adjustment facility. Or if there is a huge liquidity in the market, then RBI can bring it MSS, market stabilization scheme. So DFSD's basic job was the similar one, means to smoothen the short-term liquidity imbalances by developing active secondary market. So secondary market, whenever RBI brings in any bonds, so those bonds for LAF or anything under this MSS, so in that case, somebody has to purchase it and they should be tradable in the market. So that tradability was brought in by this DFSD. Okay. Some of the objectives set up by National Housing Bank are given below. Choose the best option. Promote sound, healthy, viable, cost-effective housing finance system. Promote a network of dedicated housing finance institutions. To leverage the degree of completion in the housing industry. D is both A and B. Very simple. Very simple. By question itself you can understand it. Okay. What do you think should be the answer? Everyone think over it. It's either A or B or D. Never see. See here. Completion of housing industry is not a question at all. Bank doesn't look at this, right? So bank will always check at D, A and B, right? Sound, healthy, viable, cost-effective housing finance system and promote network of dedicated housing finance institutions. Okay. Move on. Next one. The India Office Committee's report, IOC 1933, recommended the setting up of Reserve Bank of India as a shareholders bank, public sector bank, bank with public-private participation, bank with dominant government participation. So RBI was set up, means IOC. This, remember the dates, very important part. 1933 IOC, then 1934 RBI Act, and 1935 RBI. Right, see this, IOC was in 1933, these years are very important and they are in sequence. Then RBI Act was in 1934 and this last one RBI was in 1935, okay, 1935, right. So this sequence you must always remember. So this IOC give the report that RBI should be set up as. So what should it be set up as? Everyone? Shareholders bank, public sector bank, bank with public-private participation. What do you think? Yeah, it was. Think over it. Everyone think over it. Very simple answer. Very simple answer. Everyone think over it. Very simple answer. Okay, I'll give you a hint. It's either A or B. Think over it now. It's either A or B. It is now? Now it's simple. Either A or B. What do you think now? Now it's simple, right? It's shareholders bank. Correct. It is shareholders bank. Comment section. It was developed as shareholders bank. This A. Okay. They didn't want anything public sector or anything. They simply said shareholders. Whoever are the shareholders will be the owners. The preemption of credit for priority sectors like agriculture was a notable feature of banking development in India. Since the inception of RBI, post-nationalization, since the inception of the bank and in 1960s. So preemption of credit for priority sectors means priority sector should be given the importance of credit or should be given the priority in loans. So this was told in which year basically? That is the basic question. Yeah. It was. Which year was it told? It was post nationalization period. Nationalization, okay. When the banks were nationalized, at that time it was told that see, The priority sector should be given the priority or importance, first priority while giving the loans. Okay. The following publications are statutory requirements of Reserve Bank of India. Annual report of the bank, a report on trend and progress of banking in India, a report on currency and finance, annual report of the bank, handbook of statistics on Indian economy. Now this is a bit tricky one, difficult one. Think over it. This is a bit tricky one, yeah. What do you think logically what should be the answer? See here, any company or any institution should give what? First annual report, and second job of RBI is what? Banking, develop the banking. So the answer will be A, right? Logical answer is this. Annual report of the RBI as well as report on trend and progress of banking in India, right? So that is the answer, 8th, A, okay? Everyone download Adda 24/7 app on your mobile. In this app, you will be getting the premium study material plus live classes, ebooks, test, everything. Okay. Whatever we need for clearing JIB and CIB, we get it over here. The annual accounts of Reserve Bank need to be signed by the following before it's transmitted to the government. So it should be signed by whom? See, basic logic, remember. Governor will be there in everything, because that governor is basically the head of this RBI, means at least the working head. So that person needs to sign. What about others? Who all should sign? Deputy Governor, Chief Accounting Officer, that is A. Deputy Governor in charge of monetary policy, Governor and Deputy Governor, Governor and the Chief Accounting Officer. So who all should sign? What do you think? Answer is quite simple, isn't it? Yeah. Quite simple. Everyone think over it. Simple, right? Governor, Deputy Governor and Chief Accounting Officer. All the three. See here. Now think of it logically. Governor. Governor, who is governor? He is the head of RBI, roughly. Okay. Head means there's another person, government above him, but after all, him or her. But governor is a head, right? Working head. Below that government, there are deputy governors, DGs. Below the DGs, there are this accounting officers, CA we will call it, or CAO, Chief Accounting Officers. Now remember, whatever is prepared by the CAOs, will this governor go and check each and every detail? For that, what needs to happen? CEO needs to sign that, see, I have done the basic requirements and I have given the signatures. Based on that, the DG will sign. The DG will not sign blindly. The DG will check whatever are the points from his or her angle. Then the governor will check. That's why the signatures of all the three are required, right? Like we have in our bank also, we have maker checker. So maker signs and then checker signs. Right? What does the checker say? Checker says that yes, this guy has done something and I have checked some basic things. Not all. Checker doesn't check. Checker just checks the basic things like whether there is a balance, whether the signature is checked by the maker. But whether this checking has been done is checked by this checker. Okay, same logic. The following chapter of RBI Act 1934 deals with central banking functions. So central banking functions, what are the functions of RBI? Functions, okay, deals with central banking functions. Which chapter? 1, 2, 3, 4. Which chapter deals with the central banking functions? Many of us feel chapter 2, but chapter 2 is not the answer. The correct answer is chapter 3. Okay. The chapter 3 of RBI Act 1934, it deals with the central banking functions. Okay. Next one. Before that, subscribe to Officers Adda 24/7 YouTube channel. In this channel, you will be getting the latest updates on JIB and CIB. Plus, you will be getting the free YT series on all the subjects of JIB and CIB, including central banking as well as including the compulsory subjects, as well as other electives. So subscribe to it right now. Click on the bell icon. Share it with your friends. Even we have other channels, Telegram channels. Click on those. Links are given in the description box. Telegram channels we have, then we have this WhatsApp channel also, right? Telegram, WhatsApp, then we have this main YouTube channel, right? So that's why subscribe to all these. Insta also, Instagram also we are there. So you can just type this Adda 24/7 on all of these, you'll get it. Okay. Central banks can best pursue their goals under the following conditions of financial independence and operational independence. Policy independence, both A and B, and government surveillance. So central banks can best pursue their job means what? Can best do their job. They can do their job well when yes, quite logical, isn't it? Quite logical, everyone. When can you do any job? Whenever you are given the freedom. Freedom in what? In what sense? In what sense will you be requiring the freedom? You will be requiring the freedom financially also, operationally also, and policy also. Right? So all of these. Central banks can best pursue their jobs or do their jobs when they are given independence in financial, operational, and policy matters. Then what does government do in this case? Government just overviews. It doesn't interfere into the daily matters. Okay? Government surveillance is not needed. A number of studies have been carried out to evaluate the economic implications of the central bank independence. These studies typically estimate the economic effects by first deriving quantitative measures of the relative independence of central banks and then estimating how these variables are correlated with the following variables. So what is this whole question about? This whole question is about how are these central banks independence or relative independence and then estimating how these measures are correlated. So relative independence of central banks and these measures correlation with these points. So which are these points? Average inflation, inflation variability, real economic performance, interest rate variations, and both A and B. So A and B means average inflation, inflation variability, and real economic performance. So this is related to what? See, our interest rate variations are not the prime subject of RBI. Of course, they are. They are means RBI will do the reactive step. It can do the proactive step in this. It will react to this. So the main job of RBI is average inflation. As I told you earlier, main job of RBI is inflation. Then second is economic performance, GDP. Okay, this is known as GDP. So the answer will be D, both. Okay. Always remember, roughly I'll tell you, inflation and GDP are inversely related. If GDP goes up, inflation will also be down. Okay, directly related. Inflation, if GDP goes up, inflation will also go up. Inflation will also go up generally. Yeah? If GDP goes up, inflation will also go up. The interest rate should be brought down in that case. Will be down in fact. To control this, what should RBI do? Suppose inflation is high. RBI should bring the interest rates up. Bring them up. So if RBI increases the interest rate, then the inflation comes down. But along with it, GDP also goes down. Okay. So that's why the main measures of which affect RBI are inflation and real economic performance, GDP. Okay. Around the Second World War, everyone, Second World War, most of the central banks emerged as follows: subordinate to the government, independent of political control, private entities, and institutions of political independence. So during the Second World War, during means what? After the Second World War, you can say. Means roughly when central banks were established during the Second World War to finance the war activities many a times. That was the main job. So around of the Second World War, these banks were established. Means the central banks emerged as what? They emerged as subordinate, independent, private entities or institutions, policies. So they emerged as subordinate. They were to support the government. Okay, they were there to support the government. Okay, so that was it about these questions. As many questions we tried to cover in almost 20-25 minutes. Okay, so now I will suggest everyone to join Adda 24/7. Okay, the classes. Now the classes right now are here. Let me show you. Let me take you to Adda 24/7 directly. Okay, hold on. I would always suggest you to go through the app. In the app, what do you get? You get 1% extra using the coin systems. Okay, so that's why go to Adda 24/7, download this app, Adda 24/7 app, and once you download it, then you'll be getting the coin systems and earn 1% extra discount. Means whatever is going on, extra 1% on it. So let's see this. Go to JIB and CIB. Click on now here. Now you have the November exams. The revision batches are going on. Click on this revision batch. CIB November 23. See this. Power Pack revision combo batch. Now you can click on this combo batch as well as you can click on this Mahapack. In Mahapack you get electives also. I will give you the clear difference. In this combo batch you get all the compulsory subjects ABM, BFM, ABFM and BRPL. And in this Mahapack you get these compulsory subjects as well as electives. Electives are also there. Okay, so that's why I would show you directly this Mahapack, because you need elective also. Click on this Mahapack. Right now you are getting double validity, means double offer. One, you are getting double validity, and second, you are getting 80% off. So double validity means what? Right now, so if you buy it for 6 months, you get it for 12 months. You buy it for 12 months, you get it for 24 months. Okay, so in single amount, you are getting double benefit. And fees is also 80% off. Look at this, 80%. 6499 for 12 months. So buy it immediately. How to buy this? Click on buy now. Fill in the, see this, DW80 code is already applied. Fill in, you can continue on this. Fill in the details, full name, phone number, email. Just make the payment and done. Similarly, if you want to join the batches, you can join that also. But remember, in the combo batch, you won't be getting this this elective. Okay, so I would always suggest you to join this Mahapack. You get elective also, you get the compulsory subjects also, you get ebooks, tests, everything you get. Okay, so join the batches immediately because the exams are right now, just now, isn't it? Bye.